Hey everyone, in this video I'm going to answer which is the best dividend stock to buy. Is it Broadcom stock or is it Texas Instruments stock? I'm going to compare these two stocks on their dividend yields, on their near-term prospects. Finally, I will look at their valuation. I will also consider their longer-term operating profit margin. So I'll do those and then I will answer in the end which one is the better stock to buy. Let's get right into it, starting with the dividend yields. And Broadcom offers a dividend yield of 1.65%. This is down considerably from the close to 4% dividend yield, but that's because the stock price has increased, not so much because the company's decreasing the dividend payment. Texas Instruments, meanwhile, offers a dividend yield of 2.82%. So if you're looking only at a dividend yield, Texas Instruments is better. However, as I usually do, I caution dividend stock investors to making decisions just by looking at the dividend yield, because you're also exposed to the risks from changing stock prices. So if the stock price goes down, it can eliminate your dividend yield. So you want to look at more than just the dividend yield when you're looking at a dividend stock. So let's continue to look at the greater details. Texas Instruments, in its most recent quarter, saw revenue decrease by 11% and earnings per share decrease by 21%. The company's second quarter outlook is forecasting for revenue in the range of 4.2 to 4.5 billion and a continued earnings per share decline. Meanwhile, Broadcom's revenue increased by 8% in its most recent quarter, and earnings per share jumped by to $8.50, up from $5.93. Broadcom had a backlog of orders that it's been fulfilling ever since the middle parts of the pandemic, and it continues to have solid prospects in the near term. Longer term, if we look at these two companies' operating profit margin over the trailing 12 months, you can see that Texas Instruments has held the advantage over Broadcom, but they are both excellent in terms of operating profit margin. Texas Instruments growing from around 20% all the way up to 49.75%, a remarkably good operating profit margin regardless of what industry. This is one of the best operating profit margins you will see from any company. Broadcom, similarly, operating profit margin jumping from 20% all the way up to 45.3%. Most of the jump for Broadcom has come after 2020. You could see here around 2020 its operating profit margin was around 15%. Now it's jumped to 45.3%. Texas Instruments rises have been more steady over the last 10 years, and yes, they got a boost also after 2020, but they've been rising ever since 2014. So two excellent companies here. They've been performing excellently over the last decade. So finally, let's look at their valuation, and I chose to use the forward price to earnings ratio to compare these two excellent dividend stocks. Texas Instruments is at a forward PE of 23.05. Meanwhile, Broadcom is at a forward PE of 19.13. So if I had to pick one of these two dividend stocks to buy right now, I would pick Broadcom. The company's trading at a cheaper valuation. Its near-term prospects are more solid than Texas Instruments, and for that reason, I would pick Broadcom here as the better dividend stock to buy. Nevertheless, these are two excellent dividend companies. You saw their phenomenal operating profit margins over the last decade, and I wouldn't be opposed to splitting up your purchase and buying a little bit of each one of these instead of trying to pick one or the other to buy right now. Nevertheless, if you had to pick one, I would go with Broadcom. Alright, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.